Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Le Pen ahead, but a majority is in doubt. The euro gains and European futures jump as France's national rally wins the first round election, but with a smaller margin than some polls indicated. And with 3 days to go until the UK general election, Labour leader Keir Starmer tells Bloomberg boosting GDP will be the focus of his government. Rishi Sunak says the Conservatives can still win, despite a 20-point gap in the polls. And top Democrats rule out replacing Joe Biden amid calls for him to quit the 2024 race following that disastrous debate. Let's check in on the markets. Yes, the impulse around the politics of France feeding in to the upside around the European futures picture because the worst outcome for the markets, again, according to the markets, of a majority for the national rally seems to be in question right now. Of course, with the caveat that voters in France will go for the second round on July the 7th. Now the focus on the horse trading behind the scenes in the politics of France and to see whether or not that story and that theme continues through the week. European futures then pointing higher by a full percentage point, just slightly over that. The euro getting a lift as well, and we'll get into that on the cross asset. FTSE 100 futures looking to add 8 points as we build up to the vote here, of course, on July the 4th on Thursday. S&P futures currently at 5,500, looking to gains of 0.2%. Nasdaq futures also pointing higher by around 0.3%. The data out of the US by the end of the close on Friday pointing again, giving more ammunition to those who suggest that a soft landing remains in the cards. Markets pricing in still around 45 basis points of cuts by the Fed by the end of this year. Let's flip the board then and look cross-asset with a focus, of course, on the euro and on the pound. Expected volatility through this week, again, on the politics of the UK and France. But the 438 is on the benchmark 10-year. Not a lot of movement in treasuries right now, but, of course, we do have non-farm payrolls as well this week, which could be consequential in terms of expectations for the Fed, expected to tick down from around 270,000 to around 190,000. Euro-dollar at 107, strength coming through for the single currency at 0.4%. The pound as well, of course, at 126. We'll see how much volatility there is given the continuous and sustained polling lead for the Labour Party as we lead up to that vote on July the 11th. Currently the pound up 0.1%, more a reflection of dollar strength in today's session. Brent, $85 a barrel, currently up 0.4%. So, to the politics of France then and the details. The euro strengthening, as we've mentioned, after Marine Le Pen's national rally scored that victory in the first round of France's legislative election with a smaller margin than some polls had indicated, while President Emmanuel Macron and the leftist New Popular Front manoeuvre now to keep the far right from power. Le Pen will now chase a majority in that second round vote.
In an unambiguous vote, the French people have demonstrated their desire to turn the page after 7 years of contemptuous and corrosive power. We warmly thank the voters and welcome this result. This first step towards choosing an alternative is a mark of confidence which honors and obliges us.
Tonight, I call on every French person attached to their freedom to the remedying of France to join me and amplify the dynamic and make the national union win against those who want to divide us, damage the public order and flout our values.
OK, let's bring in Bloomberg's Caroline Cornat in Paris, who, of course, has been following all of this for us. Caroline, a big weekend for the voters of France, of course. What were the key takeaways from this first round vote for you?
The far right clearly came on top with 33% of the votes in this first round, but that was actually slightly below than our latest poll of polls that was published on Friday. In second position, you had the New Popular Front, this union of the left, which includes the far left with 28%, and Macron came third with 21%, which was actually slightly better than expected. Now, a lot will depend on those so-called triangles, where you have three candidates facing each other in the second round next Sunday. In fact, there are triangles in more than half of the constituencies, more than 250 constituencies. There were only 8 of them last time back in 2022. So a lot will depend on whether those candidates who came third will actually remain or withdraw from the second round. And in fact, the far left of Mélenchon and Raphaël Glucksmann from the Socialist Party both called for those who came third to withdraw in order to block the national rally. We had a few polls showing that Marine Le Pen could get an absolute majority, but it's not as clear as it could have been before this first round. It is also possible that she will fall shy of a majority.
Caroline, we know, of course, there will be horse trading between now and the next round of voting on July the 7th, and markets will be scrutinising that. What do you expect to line up? What are you going to be watching for in the next 7 days or so?
Today and tomorrow are going to be the 2 most intense days of political bargaining and horse trading, because candidates have until tomorrow night to say whether they will run in the runoff on Sunday or not. So that's when you will see whether those candidates who came third actually withdraw to block the national rally or they don't. In any case, you have 3 potential scenarios on Sunday. One is, of course, absolute majority, and then you have a cohabitation with Jordan Bardella becoming prime minister, having to share power with Emmanuel Macron. Second scenario is a hung parliament that could potentially create gridlock with impossibility of implementing any policies over the next 3 years, potentially a workable scenario for the markets. And of course, there is a third way, which is that the union of the left implodes after the second round, and the far left is sidelined, and Macron somehow manages to form a new fragile majority with those moderates from the left wing and the moderates from the right wing. And obviously that would be the most reassuring scenario for the markets. In order to gain some more voters, Macron actually, ironically, decided to suspend the implementation of his unemployment benefits reform.
OK, so those are the different potential scenarios, different outcomes, as you outline them for us. What about the potential impact, then, longer term, on the French deficit and French debt?
You know, the National Rally has watered down its program a lot to appear more mainstream, more reasonable to the markets. We know, of course, that they want to lower the sales tax on energy, which would cost 12 billion euros. But it is quite unclear when exactly they are planning to implement their other costly measures, such as lowering the retirement age to 62 or increase salaries by 10% by lowering social contributions. The program of the far left, however, is definitely more costly, 78 billion euros, according to Bloomberg Economics, with measures including taxing the wealthiest 8% of the population, so potentially a scarier scenario for the markets. In any case, it is bad timing when French deficit was already at 5.5% of GDP last year, and France has, you know, has been placed already in an excessive deficit procedure by the EU.
OK, Bloomberg's Caroline Gonard in Paris, outside the National Assembly, following, of course, that consequential vote. And Caroline will be across this story for us as we lead up to the next vote, of course, on July the 7th. The market impact is there. We're feeling that today, then. The euro and French bond futures gaining, then, on signs that the far-right national rally won by a smaller margin, as we've been reporting on, than some polls indicated. Let's bring in our executive editor for Asia Markets now, Paul Dobson, for the analysis on this and the euro strengthening, as we've mentioned. Paul, to what extent is this an unwind of the risk premium that had baked into European assets versus optimism around the euro in the weeks and months ahead?
I think that's right. It's more about that risk premium, and it's not exactly a full unwind at this point in time. You know, there's a little bit of a gain for the euro. There's some outperformance of French government bond futures relative to bonds, relative to treasuries, which shows you that maybe the market is taking away some of those bets on a worst-case scenario from a market's perspective, which would be a radical swing one way or the other, right or left, in the vote. isolating the centre and paving the way for policies that may, trouble the deficit or trouble the stability across the euro area. So in so much as this gives the hope that there will be more of a centrist approach, more of a mainstream approach, more predictability as well, even if, as Caroline said, the second scenario she mentioned of a kind of hamstrung or lame duck government that can't do very much at all is what we end up with. And that's being seen by the market as being something of a positive at this point. And therefore, the modest but, reasonably across-the-board gains for the euro.
Paul, with the focus on the US, non-farm payrolls out later this week. We had some data that suggested by the end of the week last week that there's a cooling in the US economy, but the soft landing scenario still remains in the cards. Does the non-farm payroll print adjust that view? What are you looking for? How consequential is that data set going to be?
It's always very important to look at the jobs data, particularly in the context of this idea that inflation is slowing, that the economy is slowing, that we're on this glide path to a position where the Fed can, rather than has to, cut interest rates later in the year. So what we'll be looking for is not just a decrease in the headline figures for the jobs data, but also another decrease in average hourly wages. If we see that, it will take us somewhere around the lowest in 3 years, which would be a really good sign for the Fed that that bigger inflationary pressure is starting to come out there, may, like I said, allow them the opportunity to cut interest rates. And I think that that's important. Being able to do it because you're comfortable on this soft landing scenario is a lot better than doing it because you have to slam on the brakes because you're worried about the consequences. And that's what the market's kind of Goldilocks scenario is right at the moment. That's what's been holding up the equities market and, keeping government bonds more or less in check as well. So we'll be watching for all of that. A big upside surprise again in those wage data could be the thing that really upsets markets at the end of this week.
OK. The focus once again on the wage data then, of course, 190,000 being the number expected across the survey. And as you say, markets still pricing in just shy of 2 cuts from the Federal Reserve by the end of this year. We'll see if that adjusts, of course, on that data. Our executive editor for Asia Markets, Paul Dobson, on a deep dive, of course, on the European asset moves that we're seeing on the back of the French politics and a look ahead to non-farm payrolls. Paul, thank you very much indeed. To the politics of the US now, where key Democrats are rallying behind President Biden's re-election bid, even as polls suggest voters are concerned by his debate performance last week against Donald Trump. Let's get more with Bloomberg's Kriti Gupta, of course. Kriti, what have you been watching over the weekend? How have the chips aligned? Where do we stand right now?
Well, it's all about what comes next here. You've started to see a real pushback, a real concern around President Biden, but this concern isn't new. It's just ramped up in the face of that debate. But remember, even when he was talking about being reelected, there were already concerns about his age, about his mental well-being as well. He came out post-debate and said, look, I am not a young man anymore, but I can do this job. And that seemed to have rallied some support. He immediately went to New York and New Jersey for a round of fundraising after, again, really to first, it was meant to be a kind of victory lap. It ended up being kind of a bit of a fundraising squeeze instead. Nevertheless, you are starting to see not only Biden reinforce his campaign bid, but some of his allies reinforce as well. The question is next steps here, because there are still rumors, there are still whispers that the likes of Kamala Harris, Gavin Newsom, Josh Shapiro, some of the other prominent Democratic governors in the country may actually be a better bid this time around. But look, there's no precedent for it. There's only been it 2 times in history, and they've only been one-term presidents that really inherited the presidency when their presidents, Johnson and Truman, at the time, were assassinated and or died of natural causes. So you aren't necessarily seeing a massive precedent. And right now there seems to be a ticking clock, because it's not the Democratic convention we're waiting for. It's the Ohio general ballot decision. Basically, you need to get on the Ohio general ballot by August 7th. So what they've done instead is have a virtual roll call, which would basically make Biden the presumptive nominee, but it would happen weeks before the Democratic National Convention. The problem here for markets and for everyone watching is that we don't actually know when that roll call will be.
OK, Kriti Gupta, thank you very much indeed on the latest regarding the tension within the Democratic Party, of course, following that challenge debate for the president. There's plenty more coming up, of course, throughout today, but also throughout the week as well. On Tuesday, we're going to get Euro area CPI. So the data and the picture around the inflation story out of the Euro area, of course, really consequential when you're thinking about the next steps for the ECB after, of course, they cut interest rates, to what extent that informs the next moves. On Thursday, of course, the political attention and the focus turns to the UK with that election here in the UK and that polling gap that remains, of course, between the incumbent Labour Party, potentially incumbent Labour Party, of course, or the incumbent Conservative Party and the Labour Party, 20 basis point moves in terms of the poll gap that remains, 20-point lead. We'll see to what extent that adjusts ahead of Thursday. And Friday, the US jobs report. We've been talking about the importance of this with the expectation that maybe the number will come in at around 190,000. And, of course, how that ties in to the Fed's next steps as well. So a big week on the politics and the data front. You can get more, of course, in terms of the roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go for more details. Coming up, Keir Starmer then on the priorities of a potential Labour government. 3 days ahead of that UK general election, we're going to bring you some of our interview with the Labour leader. That is next. This is Bloomberg.
We've seen the rise of populism and nationalism across Europe, across America and other countries, and it is very important that we make the case that only progressive democratic parties in government have the answers to the challenges that are out there. I think there are more global challenges now than there have been for many years, whether that's conflict, whether that's poverty, whether that's climate, whether that's energy, you name it. But we have to join with our allies across the country, across the world, to make the positive, progressive case for meeting those challenges. Now, we've actually been doing that already in opposition, so I talk regularly to my opposite numbers in progressive parties across the world. We would double down on that if we're able to form a government, because that's an important part of the reset here in the UK, but it is also important, as you'll appreciate, in relation to America and Europe, and there are lots of moving parts in 2024.
OK, the UK's Labour leader, Keir Starmer, telling Bloomberg that a win for his party in Thursday's UK election will be the answer to rising populism, or at least one answer to rising populism. Keir Starmer then also telling us about his priorities, as polls predict Labour will win, of course, a landslide victory. We will wait for the details and see what comes to pass, of course, post-July the 4th. Let's bring in Bloomberg's UK correspondent Lizzie Burden for the details. What else did the Labour leader have to say then?
Well, another big message is that there aren't going to be any surprise tax rises after the election. The bank's particularly worried about a windfall tax. But it means that he's going to be relying on growth to bring extra revenue for the Treasury. Of course, the Institute for Fiscal Studies says that that's a gamble. And you've also got some of his own officials saying that Labour is going to have to re-enter the EU Single Market and Customs Union to achieve this 2.5% growth target if you can't actually get the revenue from tax rises. Now, we've also had Rishi Sunak, the Prime Minister, out in the last furlong of this campaign, his message being, do not surrender to Labour. It's interesting, I think, that actually it's only in the latter stage of the campaign that you've had him fighting like an underdog, really trying to distinguish himself from Boris Johnson and Liz Truss, whereas this earlier in the campaign. But he continues to be forced to defend the 14 years of Conservative rule and answering for Brexit and the corruption during the pandemic. But he insists that he's still going to be the Prime Minister on Friday. Of course, he has to, really, whatever the polls say. But, Tom, I think it's significant that over the weekend you've seen both the Sunday Times and the Financial Times saying that really it's time for a Labour government, and actually echoing the message of Philip Hammond, the former Chancellor who we spoke to last week, saying, yes, the Conservatives could do with a bit of time in opposition to regroup, but it would be unhealthy for democracy for them to be reduced to a rump in opposition. OK,
really interesting as we get those endorsements coming through from some of the main national newspapers here in the UK. So Rishi Sunak insisting the Conservatives can still win, and the Labour Party as well, warning against complacency.
Yeah, that is the message from Keir Starmer. Of course, as you always remind me, Tom, the scores on the doors are what matter on Thursday in the election. And he does not want the undecided voters not to put their ticket in the Labour box. So that is the Starmer message. Where you heard in that clip him saying, actually, Labour's going against the grain in Europe and the US, it would seem, with populism rising on both sides of the Atlantic. Actually, a closer parallel perhaps would be Reform, this party on the right wing, led by Nigel Farage, seems to be a closer parallel to what's happening in Europe and the US. I think it would be interesting to see whether Farage would claim to do a better trade deal with the US if it's led, indeed, by Donald Trump.
Well, as you say, those international political ramifications are really fascinating as well in terms of the overlay for here in the UK as we lead up, of course, to the vote on July the 4th. Lizzie Burden, across all things politics for us, thank you very much indeed with the latest as we lead up, of course, to that general election in the UK. Coming up to the politics of South Africa, and South African President Cyril Ramaphosa announcing his unity government cabinet after more than a week of discussions. We are live in Johannesburg with the details. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Monday, July the 1st. Now, South Africa's President Cyril Ramaphosa has announced his new cabinet, allocating ministerial posts to opposition politicians while also retaining some close allies. Enoch Godongwana stays on as the finance minister, signalling continuity in South Africa's economic policies. For more on this, let's bring in Bloomberg economics and government reporter Ntando Tukwana, who joins us now live from Johannesburg. Ntando, why did it take so long then for Ramaphosa to announce this cabinet? This is a moment of history for South Africa.
Yeah, Tom, and I think while it's important to note that there isn't a legal prescription that stipulates the period of time the president has to announce a new cabinet, this certainly is not the norm. And part of the reason why it took so long is because in a government of national unity, including about 10 parties, there had to be negotiations about how those cabinet posts were going to be shared. And there had been contestation within both parties about which positions, should be given to the DA and which positions should be retained within the ANC. And the Democratic Alliance actually wanted significant posts in South Africa's economic cluster, which the ANC was resisting to let go of. And so that is part of the reason why the negotiations took such a long time. In actual fact, the ANC had initially offered the post of trade minister, but then withdrew that post, and it caused quite a bit of furore. Those are some of the reasons why it took so long.
How are the markets interpreting then this announcement, the details that we now have on this South African cabinet?
We've seen the Rand rally after the announcement, pointing to the fact that markets are anticipating an acceleration in key reforms that had started to gain momentum in the last administration. And that is partly reinforced by the reappointment of Finance Minister Enoch Godongwana, who is walking a very tightrope in trying to get the country to deal with its debt problems. He's trying to, consolidate the fiscus. And some of the posts that were retained within the ANC are related closely to those key reforms that South Africa is trying to work on, like energy and transport. If you look at South Africa's situation on the power side and the logistics side, those two areas have really crimped economic growth, and markets would be really excited to see how this government will work together to solve those solutions, those problems.
Bloomberg's economics and government reporter Ntando Tukwana, thank you very much indeed. Don't miss Africa Amplified, by the way, which this month will be live on Thursday, the 4th of July. We're going to be looking at aviation with interviews from industry experts, including IATA's chief economist and the CEO of South Africa's Airlink. Coming up, we're going to take a look at the market reaction in more detail to France's first round vote as the National Rally scores that victory, while other parties now manoeuvre to prevent a far-right majority. That's coming up. This is Bloomberg. So, European futures pointing firmly higher then, gains of more than 1% on the back of the politics of France. Yes, the National Rally have scored big in terms of that vote, but arguably not the worst-case scenario for these markets in terms of a majority for the national rally. The focus, of course, switching to the movements behind the scenes between now and the second round vote on July the 7th. So gains there, as you can see, of 1.8% coming through for European futures. Here in the UK, the FTSE 100 is pointing to modest gains as well of around 23 points. The S&P stateside looking to gains of 0.3%. Nasdaq futures pointing higher by 74 points, up by 0.4%. The data out of the US last week suggesting that there is a cooling to this economy, but a soft landing remains in the cards. We look ahead to non-farm payrolls later this week. Markets still pricing in close to 2 cuts for the Federal Reserve by the end of this year. The S&P up around 14% year to date. Let's flip the board cross-asset then and look at the moves in treasuries and, of course, the euro, which is gaining this morning on the back of the vote out of France. Euro-dollar at 107, a pop there of 0.4%. The US 10-year, not a lot of movement so far in the session, 439, and we'll see how that adjusts around the data out of the US, of course. The pound at 126, potentially more volatility as we lead up to the vote on July the 4th, currently up 0.1%, and $85 a barrel on Brent. Some gains coming through for oil in the session so far this Monday, up 0.5%. Let's go to France now, and the question around how traders are positioning as they digest then those results from the first round of snap parliamentary elections. Let's get the view of Marija Veitmane, State Street's head of equity research. How to position, how to think about the politics of France. Marija, are you relieved by what you've seen over the weekend? Would you position and lean in to this move on European and French futures?
I think our view was, we were quite skeptical about relative our outlook for Europe relative to the rest of the world, even before elections, even actually before the elections were called. I mean, our key point was that, European earnings outlook looks very, very vulnerable. Europe is very cyclical economy, and economy is slowing everywhere. That's what central banks wanted to achieve by hiking interest rates. So European earnings were problematic to start with. Then we have this huge political uncertainty. Everything goes down. I would say, from what I read this morning is that the results of the first round, again, very importantly, first round, we don't have final results, are maybe not as bad as people were worried. But still, the situation in France is very difficult. So you have a choice between hang parliament and parliament and far-right government. So neither of them sound particularly appealing. So I think I would probably stay out of France, but maybe you can buy the dip in countries like Italy that went down along with this French uncertainty. Yeah. So still skeptical.
Well, talk to us about that. So, Marija, that rationale then, that France's loss could be Italy's gain, what underpins that view?
Yeah, no, I think a lot of it comes from again, I'm having my kind of equity hat on, is I do like to focus on earnings, and what's earnings kind of backdrop in Italy looks a lot more constructive. Italian stock market is dominated by banks, which spent last decade getting the house in order post financial crisis and European debt crisis. So it took a long time, but currently Italian banks are actually in decent shape. The quality of their balance sheets is quite strong. They cleaned up the case, and they probably they're not very vulnerable to changes in kind of political backdrop, political risk. So that's constructive. So to us, earnings backdrop is better there. France, on the other hand, biggest sectors in the index are industrials, consumer discretionaries, and those were suffering even without election. So that's a kind of the key concern for us.
OK. When it comes to the US, then, if we just stay on politics for the moment and we look ahead to November, and, of course, all the focus over the weekend as to whether or not Joe Biden remains the candidate for the Democratic Party and the challenges there, how do you think about the political risk in the US? Is it too early to start positioning around that?
Yeah, I'm a little bit less concerned about US political risk, because what kind of our thinking is that whoever wins U.S. presidential election is very unlikely to have kind of the full sweep. the House and the Congress. So it would be a lot of political negotiations. And we know if Trump wins presidency, it would be a lot more drama around it and maybe more volatility. But right now, if I look at things like VIX, volatility is extremely, extremely low. And it really seems that what market is focused is that this kind of benign trajectory of inflation is coming down. We know that next move from central bank is a cut, and market believes in soft landing. So that kind of suppresses volatility and stocks go higher. I mean, as you know, our view may be a little bit more concerned with things that soft landing is harder to achieve, but still, market is looking for cuts, and that suppresses volatility and stocks rally.
Yeah, so you still have a question mark over that soft landing. Though the data of last week seems to suggest that is still in the cards. If we do get that soft landing scenario, and I know that's not your base case right now, Marija, but if we do get it, how do you play that? What is the soft landing trade?
Yeah, that's actually a really good way of answering the question. So, I mean, if you do believe in soft landing, what you should buy? You should buy small caps. You should actually buy European equities, as they're very cheap. You should buy value, maybe industrials, materials. And that's exactly the trades institutional investors are not making. So when we look at State Street custodial database, so we see how investors are moving the money, and those 5 trades are really what investors are selling. Instead, and in fact, the only trade they're buying is they continue to buy US tech. And that's the biggest position they have. It's crowded, it's expensive, but we see people adding to it. And to me, that's a confirmation that overall, as I said, earnings are slowing down pretty much everywhere. It's very hard to find places where they're not, except for technology sector. So AI created this kind of source of revenue for the sector that almost independent of what's happening with business cycle and soft landing, hard landing. So that's the source of revenue that is likely to continue to be there. We know that tech companies like order books are as long as like a couple years. So money is coming there, and that's what investors are buying. So they're buying the large cap quality of technology sector.
OK, Marija Veitmane, State Street Head of Equity Research. On the concentration, of course, still within the equity market of the US around AI and technology, and a bit of concern still about what's unfolding in Europe. Not that confident in terms of wanting to buy, certainly French equities, but maybe Italy gains on the back of the challenges around France. Marija Veitmane, thank you very much indeed. On the market take to the politics, of course, of the Eurozone. Let's go back to the top story then and get more details in terms of how this is all transpiring. Marine Le Pen's national rally then scoring victory in the first round of France's legislative election with a smaller margin than polls indicated. Le Pen will now chase a majority, while President Emmanuel Macron and the leftist New Popular Front manoeuvre to keep the far right from power.
Our instructions are simple, direct, and clear. Not one more vote, not one more seat for the national rally.
Let's get more then from Caroline Cornat, who is outside the National Assembly in Paris. Caroline.
Yes, and I'm very happy to be joined by a professor of economics and international relations at HEC, the business school, is Jérémy Ghez. Good morning from this National Assembly. Were you surprised by those results last night? Did Marine Le Pen do better or worse than expected?
So these results are more or less in line with what institutes and polling institutes had told us. I think there may be a slight disappointment in the Le Pen camp right now because we're slightly under, according to a lot of estimates, at the absolute majority. We're not at the 289 seats that they would have hoped for, but this is the wave that we expected, the wave that was announced, and the wave that you could foresee with the European elections a few weeks ago.
So what's your likeliest scenario next week on July 7 in this second one? Are we going to see a hung parliament? Are we going to see an outright majority for Le Pen's party? What's your likeliest outcome?
So I think those are the two scenarios right now. The scenario number one is the absolute majority with someone handpicked by Marine Le Pen, probably not her, someone she handpicks becomes prime minister. The name of Jordan Bardella is probably on everyone's minds right now. He made it clear that he would only go to Matignon, he would only take the prime minister's spot if he had that absolute majority. And as of today, This is one scenario. There's really no certainty because a lot of estimates are still below that absolute majority line of 289 seats.
If Jordan Bardella does become prime minister, how is that going to work out? And is that going to prevent Marine Le Pen from becoming president in 2027, or is that going to help her?
So there's an Italian precedent in the short run. The Italian precedent of Ms. Meloni, Prime Minister Meloni in Italy, that really has been, it seems, disciplined by the exercise of power in so many ways. So Jordan Bardella has walked back a few of the most controversial measures. If he does take office, I think he may take a few symbolic moves to satisfy his base, but the Meloni precedent might be in place. The longer run, 2027, we're 3 years away from a presidential election. I think Emmanuel Macron's bet might be it will tire them out. It will make them. It will make it even harder for them to reach the Élysée Palace in 2027. This said, I'm also very interested in U.S. politics, and as a U.S. political student, I would tell you, look at Donald Trump. His exercise of power, populism may have damaged part of the country. According to voices of a few, you see he's still around, so be careful with wishful thinking.
Now you have another scenario which is very, very interesting. There's a lot of three-way contest. Do you think that we could potentially get instead a sort of technocratic government like we had with Mario Draghi?
Yeah, so those three-way contests would mean everyone except Marine Le Pen's camp getting together to try to limit the extreme right's score next Sunday. This would mean basically a hung parliament where the National Front, the Rassemblement National, Marine Le Pen's party, would have a smaller majority, a relative majority, and a hung parliament. In which case, all bets are off, but indeed a technocratic government might be a possibility, a second Italian precedent right here, like the Draghi precedent, as you suggested. This means what? It means we have in France our pool of technocrats, very talented ones. They would probably not last very long, but enough to basically for politics to settle down, and enough for basically the situation to get us out of this. So would this be Sylvie Goulard? Would this be Pascal Lamy? Would this be Jean Pisani-Ferré? Would this be any one of these big voices that we've seen in the past that have exercised power and that could stabilize the country? I just want to state I am not privy to any conversation, but this is a possibility.
That's very interesting. However, does that mean that the current heavyweight, Gabriel Attal, Bruno Le Maire, are definitely out?
They've been branded as Macron supporters. They have that legacy. I think that in the short run, it's hard to imagine what their political future would look like in the very short run. Gabriel Attal is incredibly young, though. He may sit out a couple of years and come back, but really all bets are off, depending on the rest. Something's got to give. We're in a political crisis. We've talked about the limits of the Fifth Republic. Very long run, something's got to give. Maybe this is the transition we're witnessing, but something's got to give.
Many thanks, Jeremy Ghez.
Thank you for having me.
A professor of economics and international relations at the business school HEC, live from the National Assembly with this very interesting point that we could potentially also get a technocratic government.
Really, really fascinating insights, and of course describing what we're seeing in France as a political crisis. Bloomberg's Caroline Connor on the ground for us, of course, outside the National Assembly in Paris. There's plenty more coming up, including the latest in terms of a potential banking deal, of course, BBVA and its attempted takeover of Sabadell, and why the ticking clock of time could be the biggest challenge in terms of potentially derailing that takeover offer. We'll get the details on that coming up. Stay with us. This is Bloomberg. The chairman of Spanish bank BBVA says there is, quote, no intention to improve the offer to take over Banco Sabadell. The €10.5 billion transaction would be Spain's biggest banking deal in decades, if approved. BBVA chairman Carlos Torres Vela spoke with the opening trade anchor Kriti Gupta.
If for some reason were that merger not to happen, which would be unprecedented, we still believe the transaction has merits, and most of the synergies, we would be able to capture most of the synergies.
So that is all on the assumption that, one, you have your ducks on a row, two, this gets approved, or three, that you even are able to be left with a stake, if not a merger. What if you're wrong?
Well, if we're wrong, and for example, the Sabadell shareholders decide not to tender, which I think is the key critical decision maker, apart from the other decision makers I just covered, BBVA would continue with the momentum, the positive momentum that the bank has. We had a 17.7% return on tangible equity in the first quarter. We have a 20% increase in tangible book value per share in the last 12 months. And this has continued for a few years now. And on both metrics, we're top of the league in European banking among our peers. Also, on the other dimension that matters, which is growth, if we look at the growth of our loan book, we're talking about 9.5% growth in constant euro terms, 7% in current euro terms. So on growth, on returns, we're top of the league, and BBVA would continue in that improbable scenario, the good momentum, the good course in which we're on.
So one of the criticisms of this deal is the value of it, and that this isn't a juicy enough offer. Would you consider raising your value?
We have presented a knockout offer to the Sabadell shareholders. It's a premium of 50% over the 3 months prior to the presentation of the transaction. On top of that juicy premium, we're very rich. The offer is an offer in shares, which means that the Sabadell shareholders will participate with a 16% ownership on the combined entity. And that means participating on the value of the synergies, the 850 million euro per year cost savings, which represent multi-billion-dollar value. 60% of that multi-billion-dollar value will accrue to the Sabadell shareholders. And maybe the summary of it all is the earnings per share accretion that you can calculate is 27% increase in earnings per share for the Sabadell shareholders. It's a very, very attractive offer that we're sure will convince the shareholders to tender their shares.
So no appetite then to sweeten the deal. This is your final offer.
As I said, we have no intention and we have no need to improve the offer. It's very rich comparing with precedents. The market is also telling us that the offer is worth more than Sabadell standalone, and that's why we are not changing it.
BBVA Chairman Carlos Torres speaking to the opening trade anchor Kriti Gupta there. Now to some other stories making the news this Monday. Atos creditors have reached an agreement that will see them take control of the embattled French IT services company instead of an outside investor. Bondholders and lenders have agreed to convert 2.9 billion euros of loans and bonds into equity, provide new debt and inject new equity. Existing shareholders' equity will be worth close to zero as a result of the restructuring. Bloomberg understands the US Justice Department will charge Boeing with criminal fraud over 2 fatal 737 MAX crashes, leaving the plane maker to choose between pleading guilty or going to trial. We are told the DOJ will also fine Boeing more than $240 million and order 3 years of corporate monitoring. A lawyer for the crash victims' families says it is a sweetheart deal for the company. Meanwhile, Bloomberg understands that Boeing has agreed to buy Spirit Aerosystems in an all-stock deal that values the company at $4.7 billion. Now, BlackRock is buying private capital database provider Preqin for about $3.2 billion in cash. BlackRock says it expects to close the deal before year-end. Preqin founder Mark O'Hare will join BlackRock as a vice chair after the deal closes. Preqin competes with Bloomberg LP, the parent company of Bloomberg News. There's plenty more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. All eyes, of course, on the euro and European assets this morning as the National Rally of France comes in first place as expected. But real question marks as to whether or not the party of Marine Le Pen can get the majority that she says she wants. The market's then a bit of a relief, bit of that risk premium being faded on the back of that. And we watch the horse trading as well between now and the next vote, July the 7th on Sunday. Currently, the single currency up 0.4%. But the concerns, of course, about a national rally, majority would be around the debt and, of course, the deficit, given that you've got debt to GDP at around 110 and 111% and the deficit at around 5.5% as well. Let's flip the board and have a look at the data coming through from China. This also ties into, of course, the fortunes of the Eurozone economy longer term. You're looking then at the manufacturing data. This is a survey of small businesses, the Caixin Manufacturing Services data coming through. The government's data point coming in, as you can see, still in contractionary territory in terms of manufacturing. Not a big surprise, in line with expectations. The Caixin survey was actually stronger, but it was the outlook for future demand that has led to some question marks. And you saw a lot of money moving in to the debt of China, the sovereign debt, to the point where you've seen record lows in terms of yields on the US 10-year. So that's significant as well, because it's been a mixed outcome in terms of the recovery of the Chinese economy. Manufacturing has been a bit volatile. The consumer remains suppressed. Real estate remains a challenge as well. Let's flip the board and talk about and get a preview of the data out of the US after some of it came in last week suggesting there is this cooling, but household income is remaining pretty resilient. We look ahead now to non-farm payrolls. This is the hiring in the smaller business sector. This is the National Federation of institutional, or I should say individual businesses, so smaller businesses, and expectations that the non-farm payrolls, as we assess this, is going to cool to around 190,000 this week from around 272,000. The unemployment rate at around 4%. Market's still pricing in around 44, 45 basis points of cuts from this Federal Reserve. But again, the non-farm payrolls data and just how the labour market of the US is evolving, really consequential always, of course, when you think about the next steps for this Federal Reserve. Now, Anna Edwards, Guy Johnson and Kriti Gupta are going to kick off the relaunch of their show this morning, The Opening Trade. They're going to bring you everything you need to know as markets open across Europe every weekday morning, 7 a.m. London time. It kicks off next. This is Bloomberg.